Hi everyone, this is Alert Day Trading. The purpose of this video and the videos I make is to journal my trades and notice any mistakes I'm making, see if there's any corrections I could be making. If you can learn from any of my mistakes, that's definitely a positive. So I'm just going to go over a couple of trades I took today. I've been really focused on my trading discipline. If you watched any of my previous videos, you'll hear me talking about some mistakes I've been making over the past couple, or at least last week, and just kind of working my way through those mistakes. And I am very pleased with the improvements I've made in terms of my trading discipline. So I'm just going to go over some trades I took. So the first trade I took was on CRON. And as you can see, let's use this. I used the 3-minute time frame here. And this was my entry. I was noticing the stock moving higher. And we had a little pullback right here. And I entered right above that candle. And we did continue to move higher. The only issue with this one is that we just didn't go high enough to where my first profit target was. And my exit strategy is to exit, trail my stop loss with the 9 EMA. And so you can see here we got stopped out, and this is pretty much right where I entered the trade. So it ended up being a break-even trade. So I'm okay with that. But, even if I stuck with my original stop loss, which was right below this candle, you'll see that we even broke just below that level. So I probably would have been stopped out there. But as you can see now, we are trading much higher. And my first profit target would have been $9.74. A little bit of frustration there, seeing that the stock actually hit your profit target, but just not in the timing that I would have wanted to. But it's okay. It's a break-even trade. Another trade I just took, SIFY. I noticed this one pushing up really nicely right now. Here's a pullback. Now, I guess the trade was still in my trade plan, but the pullback was much further. So that would be my mistake right there. So if you take, let's just draw, if this is $2.38 and this is $2.99. So if we subtract that, so $2.99 minus $2.38, that's about 60 cents. So the pullback should not be more than 30 cents according to my trade plan if I want to enter it. So if we go down from, if this is the high and this is the pullback right here, we went down to 254. So that's about 45 cents. That's well over the 50% mark. So that's my mistake right there. I still entered the trade as it broke above. I was hoping for some kind of continuation, but you can see we ended up with a lower high, and I ended up stopping out. I stuck with my trade plan. The only problem is I did break that entry criteria of the pullback should not be more than 50% of the most recent move. So this is the low of the most recent pullback, and this is the high. And so the pullback should not have gone further than this point right here. And so if we were having consolidation here, then chances are we would have a better chance of having a continuation there. So that is my mistake. I still stuck with my risk strategy, so I'm okay with the loss. I just need to remember not to enter a trade if the pullback is more than 50% of the move. Another couple of negative signals is you have two red candles kind of engulfing this green candle. So that's not really a good sign. If you look at this chart, the 3-minute chart was cleaner. So I guess in the 3-minute chart it was more valid, because the pullback, if you count it from down here, let's see, that's about $1 move. So the pullback went all the way down to, actually it broke more than 50-cent pullback. So barely, though. It also depends when this candle is forming, but actually the low of this candle is more than 50 cents of the move. So that is kind of a fine line right there. So I might have still been okay to take that trade. I probably wouldn't have entered it anyway, because this candle, this red candle, doesn't look like it broke above the green. So might have entered it by 1 or 2 cents and then ended up taking a loss. But this, I might have not ended up taking a trade here. So I didn't take one, but I'm saying if I were to take one, I don't think it would have, the order would have triggered. So that's just another example of why I use that 50% move. If the pullback is more than 50% of the previous push higher, then chances are you're probably not going to get a continuation. You still might, but I've noticed in my experience that that's not the case. And then I did take a winner and a loser on Snap. So today's pretty much a break-even day. I noticed Snap pushing up above this red line, which is an all-time high. And this red candle was my entry. As you can see, I got stopped out, and I made a second entry on the 3-minute candle. You can see a much cleaner chart. This was my entry right here. And so this would have been my stop out. And you can see we pushed all the way up to 50. Wait a second, this is not the entry. This is, there you go. Okay, so this is the entry right here. And so I was looking at that. I was confused because I knew my entry was around 55.20s, and we pushed up all the way to 55.79. So I was risking 40 cents here, and I ended up with a 65-cent move. So I did end up getting my profit on this trade, and then I ended up breaking even for the remaining shares. Obviously, we would have hoped for a push above $56, but we didn't get it. And so now we're pretty much consolidating. That's pretty much all the trades I took for today. Let's see what the 10-minute chart looks like. That's not a good chart in my opinion. Let's see what the 30-minute looks like. So the 30-minute is still valid. I think this candle is showing both buying pressure and selling pressure. And the previous all-time high is holding. So I'm done for the day, but if I were to continue trading and this candle were to, pretty much stay as is, I would probably take a buy entry above these levels with a stop loss below here. But because here, if we take the move, the most previous move, it's all the way from 51 to 50, almost 56, almost a $5 move. And so half of that is $2.50. So let's just go down $2.30. So that would be all the way right here. So clearly the pullback is well within the 50% pullback rule. So I would eventually take that trade. The only other thing is the time of day. So we're kind of getting into the lunchtime in Eastern time, and it's about almost 8:30 in the Pacific time. So you do start to see volume decrease. So that's why I don't trade past 11 a.m. Eastern or 8 a.m. Pacific time, just because the volume does, you see a big decrease in volume. So that's it for today. The thing that I am considering is right now I'm currently trading the 1, the 3, the 5. I also do the 10, the 15, the 30, 1 hour. And sometimes I'll even, those are all the time frames. And sometimes I'll even consider taking maybe a daily chart trade or a weekly chart trade. So I guess you can consider that a swing trade. Haven't been doing that lately, but I have done it in the past, and I've had some winners, some losers. So I just haven't done it so much. I try not. I don't like so much to hold day trades overnight, unless they're really profitable or have been profitable, and I just kind of put a trailing stop on it. But I don't like to actually be, in a trade trying to make profits, unless I'm using like maybe a monthly chart or a weekly chart or a monthly chart, something long, or even a yearly chart. That I'm more comfortable holding overnight personally, just because that's more for a long-term trade rather than, a day trade, or just trying to grow this account size. It could go both ways, where you have a move that goes a few dollars in your direction, you end up with a really nice trade, but at the same time, you can also have it go the other way. So I'm just not crazy about that strategy for myself. But what I do need to do is go over my statistics, because I do keep pretty good statistics, and when I do follow my trade plan, I can tell myself, I can go over my stats and see which time frames have been the most profitable, or at least the best. Um, the I'm trying to say is, like, I keep track of every trade I take, and I keep track of which time frame I used, and I would say the larger the time frame, the more reliable the trade might be. But the problem too is that some of the risk to reward I get on the lower time frames have also been really good. So I need to figure out, is it worth taking the trades, for example, on the 1 minute? Because I do notice I'll take a loss on the 1 minute, maybe a loss on the 3 minute, and then I end up taking a winner on the 5 or the 10 minute, and I end up breaking even. That happens a lot. So I'm wondering if I should take off the 1 minute time frame, at least start with the 1 minute, and see if my results change, because you can see the 1 minute, but you get these nice moves on the one. This is the 3 minute, so perfect example that the 3 minute is so much cleaner than the 1 minute. Let's take a look at the same exact move. Here's the 1 minute, and I guess the 1 minute can give you some nice clues, but the 3 minute is just so much cleaner as far as my strategy goes. So I'm considering eliminating for now maybe the 1 minute time frame. I think partly because I do tend to overtrade. So if I take away the 1 minute time frame, it'll make me trade less, take less losses, and also take less trades when it comes to revenge trading. So that's definitely something that I'm considering. So we'll see how that goes, and I'll let you know if I end up falling through with that. I do think that I'm leaning toward not trading the 1 minute time frame and seeing what happens, maybe for a week or two or a month, and then we'll see from there. All right, well, that's the end of this video. Just to remind you, the purpose of this video is to journal my trades, notice any mistakes I'm making, see if there's any corrections I could be making, just talk about some ideas I have, and if you can learn from any of that, obviously that is a positive. So good luck, and thank you for watching.